So we're going to be taking a quick look here at the Bitcoin versus US dollar chart, and I'm going to start with the big time frames as usual. So here I have the monthly candle, which we've been monitoring for some time now, and we've been saying that we need to wait for a candle to either close below the 20-month moving average or see a bounce here on the 20-month moving average. For now, last month's candle closed way above the 20-month moving average, so that's positive, but we still need to see a bounce here, a clear bounce, one candle that's going to be a green candle and actually showing a bounce here, ideally going above the high of the previous monthly candle. If the price trades above the previous monthly candle, which is right now at $7,435, if the price goes above this level, then that would be actually an entry, a long entry on this time frame. So it would signal that we will probably have a little bit of an uptrend here, bouncing on the 20-month moving average. Of course, nothing is guaranteed. Even if it trades above 7.4, it could also reverse and go back down. There's nothing 100% sure in markets or in trading, but you need to follow the signals, and the signal to enter long would be if the price trades above $7,435, more or less. So far, just waiting. If this current monthly candle closes below the 20-month moving average, then very likely we're going to break down. And if it trades below the previous low, which is actually, we should count this longer candle here, below 5,840, very likely, according to technical analysis, it'll break down. Moving on to the weekly, we can see that we are getting rejected once again at the 20-week moving average. So guys, you can see here there's a fight going on between bulls and bears. The bulls are trying for the 20-month moving average to hold and bounce, so they want to bounce it bullish, and bears are fighting on the 20-week moving average to bounce it bearish. So there's a little bit of a fight here between the 20-month moving average and the 20-week moving average. That's why the price is kind of undecided here, and it's, yeah, just hard to tell. We're going to have to wait and see which of these two major moving averages is going to be stronger and is going to push the price one direction or the other. But here on the weekly, we can see it's not only the 20-week moving average, it's also this major resistance from the top of this bearish triangle. So that's double resistance and very strong resistance. So yeah, it's bouncing off right now, getting rejected. So I'd say likely we go back down to $6,000 again and see what happens from there. On to the daily, we can see better this channel that we've been playing for the past several days. Now I have been saying to buy support and sell at resistance or sell at some target in the middle of the channel until this channel broke down, and it is currently breaking down right now, so that's not good. Usually when trend lines are broken, we have vertical movements down, especially in bear markets. So let's see. Of course, nothing is guaranteed, but we also went below moving averages on the daily. So right now moving averages are resistance and not support anymore. So yeah, we have the descending resistance, we have the 20-week moving average as a resistance, and also daily moving averages as a resistance, the 20 and the 50. So very strong resistance. Also this support line of the channel, which was support for several days, now became resistance. So it's possible we drop a little bit and we come back up just to retest the support of this channel, which is now resistance. It's going to be at the same level with moving averages as well. So it's possible we bounce back up, retest it, and probably get rejected back down again. Onto the 4 hours, we can see even more clearly how we are breaking below the support of this channel again. So this channel is not it's not a channel anymore, it's been broken. We also have a little head and shoulder that we have been monitoring here for the past few days. Let me draw the neckline here. So this would be the neckline. The price actually traded below the neckline, but it's bouncing now in the 4-hour candles. It's bouncing, and the candle might close above it. I mean, the previous candle already closed above the neckline, and the current candle is trading above it, so maybe it'll close above it. But as I said, it wouldn't surprise me if the price bounced back up just to retest the bottom of the channel as a resistance, and from here go down a vertical. And again, the moving averages in the 4 hours are going to be on the way as well, acting as a resistance. So yeah, the price is oversold at this moment on the RSI in this time frame. So yeah, we could be seeing a little bit of a bounce, but this channel has broken and the target is down at $6,000. So you need to trust the technical analysis and trust it, and trust that the target will be made. Not always targets are made, but they are most of the times. And on to the 1 hour, we can see in this time frame we can see a rounded top, which is also bearish. We can see it here very clearly. So the target for this inverse cap would be, let's see, from the high to the low, and the target for this pattern is going to be at 6,250 more or less. So we could have a little bit of a handle here, inverse handle. If we treat this as a cap, maybe a handle here, just as I said, to retest the bottom of the channel, or maybe not even that high, just touch moving averages and then back down. And if this line finally breaks for good and candles start closing below it, the most immediate target is 6,250 more or less, and the next target from the head and shoulder is 6,100. Yeah, 6,100. So that's all that I got for you today, guys. Thank you very much for watching, and I'll see you soon. Bye.